Meeting recorded.
Today, a spotlight on flood insurance and cover some facts that builders should know. My name is Bruce Bender with Bender Consulting, working with the Louisiana Department of Transportation and Development, who is a FEMA coordinating technical partner. They also are the NFIP state coordinator. They are helping FEMA with the mapping the FAP program in Louisiana, as well as managing the National Flood Insurance Program. FEMA has provided a grant to DOT to look at ways to increase the number of people who are financially protected with flood insurance. So that effort we're doing is providing webinars and workshops to builders, realtors, and insurance agents to inform them about the flood insurance program and important things that they should know. That way, hopefully it demystifies it, then those stakeholders like yourselves will be able to better explain and take actions to help reduce flood risk, whether that's through some type of mitigation or through a flood insurance. We've got a lot to cover today. Just quick on my background, I did manage an insurance agency for a couple of years, managed a large IP flood insurance program. I was known as a write-your-own flood insurance carrier, one of the largest in the programs. And for the past 17 years, I've been consulting, working with FEMA, counties, communities, finding ways and communicating ways to reduce the flood risk, not only through flood insurance, but also through other mitigation activities. This workshop is going to focus on flood insurance. I know there's a lot that you as builders and developers can do to help reduce the flood risk through mitigation, but we're going to take a look first at the flood insurance basics and then jump in a little bit and talk about map changes, because how and when you build can be important around upcoming map change. I'll have a couple slides about recent changes that you developers and builders should know, as well as you may have heard more about private flood insurance. There are a lot more policies of that now being written in Louisiana as well across to the U.S. And then leave you with some resources. I won't go through the resources in detail, but I will be sending this PDF out to everybody who attended, and therefore you can look at those resources on your own, and you don't have to write down all the long links and URLs. On that. By the way, that screen, a lot of people on live workshops, I actually have them try to guess the name of that storm. And if you think back 3 years ago, there was no name to that storm. It does look like a tropical disturbance, but it was not. It was just a storm 3 years ago decided to come over South Louisiana and sit for several days and had some horrific flooding. So it doesn't have to be a tropical disturbance like what's hitting Texas and southwest Louisiana right now. One of the things I first wanted to concentrate on in the basics question or discussion was, what is a flood? We hear different definitions of, oh, it flooded or it was a flood, but the flood policy that the National Flood Insurance Program has is very specific. It is a single peril. It is only on flooding. It deals with being general and temporary, which means, i.e., it's not going on and on and on. But here's a key part. Acres for your rural areas or 2 or more properties. Now, to say adjacent long time ago, but took that wording out. So it's 2 or more properties. Interesting, it says at least one of them is yours. Well, you'll be filing a claim or getting a policy if it wasn't, I would think. Unusual and rapid accumulation runoff from any source. So distracted driver dropped the phone and was picking up and then looked up and there was a fire hydrant in front of him and smashed into it and it flooded the street in your house. That can count as a flood because it's from any source. It does not have to be from a river or from a coastal tide surge of some sort. And areas where we have areas like in Puerto Rico, and we get those heavy tropical rains and loose soil, or like in California and Arizona, where we have wildfires and the ground gets really hard, almost crystallized like glass, and you get runoff. You get these mud flows. That's covered as well. interesting question for you, just kind of to put things in perspective. Here is a little city park or town park that also happens to be allows people to grow vegetables, but it's owned by the town and city. And they had heavy rains and it flooded the park and the house next door. Now, as a flood by the NFIP definition for that homeowner next door if they had a flood policy. You said was, yes, you are absolutely correct because it's two or more properties. Here's where the nuance is. The property does not have to be a building. The property is owned, here in this case, the park, by the town or the city. And the owner, a private citizen, owns the house next door, so that's two properties that got flooded. That does fit the definition of flood. Well, how did that homeowner get? Well, for the homes, the right now is up to $250,000 for the building and $100,000 for the contents. All their buildings are $500,000 except for condos, and I won't go. This course does not get into condominiums. Standards, $250,000, a lot of people say, is not covering enough. So what do you do if you need more coverage? We go to what's called the excess flood market. That's private policies. A lot of it's been written by Lloyd's, and it's been around literally for decades, and can be relatively inexpensive compared to how much coverage you're getting for the NFIP. Not always, but managing that Write Your Own program created an excess flood program, and it was fairly competitive. You had to be, of course, you had to cover, make it profitable for the company, and more out there like that now. So it is available throughout the U.S. So is a building, just like flood is unique, building is unique. And basically, it's two rigid walls and a roof. So argue in the picture up in the top right-hand corner is that a rigid roof, but basically, rigid walls, but basically two rigid exterior walls and a roof. To be above ground, permanently located. And for builders and developers, the house during construction, so you got to go get a construction loan, you can actually get flood insurance even though the building hasn't been started. It'll be based on specs, and then when it's completed, if anything's changed, you'll have to get a newer policy. If you are creating or building commercial buildings in an area, all the same owner, fortunately, while on your commercial property and casualty, you can get one policy that covers it all. It may list them all, or it might just say one blanket coverage total, and then you apply that amount to whatever loss or building. The flood program, you got to have an individual policy for every single one. And you hear frustrations, universities, campuses that have different buildings, farmers where they've got several support buildings out there. They've got to have a separate policy for the barn, for the pump house, it's just covering the pump, it's the silo, etc. We're talking at the end of the thing called Risk Rating 2.0, where the NFIP is going through a transformation right now. They hope to, one of the policies they're looking to create is an ag policy. Whether it means they're going to change the requirements, I don't know, but around no blanket coverage is available. So what is covered with a building? This way that somebody once described it for me as a visualization is take a building, turn it upside down, and what falls out kind of its contents, and what's not is the building. So you've got permanently installed bookcases, the microwave, the stoves, the pumps, light fixtures, garbage disposals, central AC, all of those things that are kind of built in will towards the building amount. Also provided is percent of that building coverage you get apply towards the detached garage. So in this picture, where I've written the word garage, though it may not actually be a garage, but for illustration illustrative purposes, that garage would be covered with that building up to 10%. It's not in addition to, but it's part of that limit. If that garage is used for anything other than a garage and storage parking, it has to be rated individually. A policy will be needed. So if you've converted that garage, or you're taking the garage for somebody and turning it into a mother-in-law building, or the kids are back, and so you are out and putting in beds and what have you in a high-risk area, or if it's not, you're going to have a separate policy set. In the case if it's a dwelling, and then you would get the dwelling policy. If it's anything else, it would be general property form, non-residential. But here's something you not be aware of. So if you're constructing something now, or you're converting the garage, just be aware of this, that it still is a garage, and on the map, the garage is actually in Zone A, house, which is high risk, and this is in Zone X, which is low risk. The inventory purchase requirement does not apply because they changed the rules that says that it only applies if the house is. Good if you're constructing things now and that line between the high risk and low risk is going through the property, could build the garage in the floodplain if you're allowed to, and properly according to whether the permits are needed. And the house be in the low risk area, and that person could get, and I'll talk about it in a minute, a preferred risk policy, have that garage covered even though it's in a high risk area. I'm back to this mandatory purchase rule, but I wanted to highlight that change in case you have to have a situation where that high risk area is cutting through the property. You're trying to figure out where to put that garage. It does not affect, as long as it stays as garage, it should not affect the requirement for flood insurance. It would not be required. Kind of puts in here as a smile, if you will, a joke, but and would this be an eligible risk? Well, look at it. It's got walls. It's got a roof. So actually, it would be covered, and silos are covered. Not that you're building those, but they are. But just on the other end of it, here's a gazebo, and it does have a roof, but it does not have walls, so therefore it would not be covered. So unique things about the definition of flood, but also about a building. Unique about the policy, the flood policy, and important builders, is this increased cost of compliance. Somewhat in your homeowners, increased cost of construction or ordinance and law, which says if you change the requirement for wiring or plumbing and you've had a loss, and now you're rebuilding from that loss of fire, let's say, and you now have to upgrade and you had this endorsement or coverage, it would be included. Well, this one is related to floodplain management. If the rules have changed, you have a flood, and now due to a new map change or something, the base flood elevation is higher, or changes are in how you have to rebuild the home, you get a certain amount of coverage. It has to be in a zone A or B, the higher risk zones. You have to be shown that, okay, because an older home, it's not compliant, it's substantial damage, which means more than 50%, or this is a second or third loss in the past 10 years that equals over 50%. Of course, the community has to have in enforcing those ordinances substantial damage. But if that follows it, you can get up to $30,000, but it's a $250,000 statutorial, but $30,000 to mitigate that house. Now, what options are available? I put it as a ACRA-FRED to help you remember. Floodproofing, not only for the commercial structures, moving the house, elevating the house, or destroying the house, relocating, elevating, demolishing, FRED. So as builders, you'd probably know, though, that $30,000 does not go very far. And in Congress right now, they are trying to pass a bill not only to reauthorize the flood program, but also to, one of them is to increase this up to, I think in one of them is up to $3,000. But may not know. After a flood, and this is where ICC kicks in, if it's been declared substantially damaged, the homeowner will file a separate claim for ICC. They'll work with the community official who will help declare that. The community gets post-disaster grants, like a thing called an HMGP. You often have to put in 25%, and let's put in 75%. This $30,000 can go towards that deductible, so your community could leverage the IC payment, then something to like this house here and elevate it up. So after somebody gets ICC and they come to you as a builder saying, "Oh, I need to help elevate my house and rebuild it," the community's got any grants, and therefore they could leverage it and actually then get more money to help you help that homeowner build to the higher elevation. Now, in zones, I put this in there. I think we're all probably on the same page, at least in Louisiana. Everybody knows our flood zones. There are the high-risk ones are known as the special flood hazard areas. Some say, what's so special about it? I have to get flood insurance. I don't think that's very special. Well, zones are V, which is your velocity along the ocean there, and A, riverine, non-accredited levee areas, in coastal areas next to the V zones. It's where 1% annual chance flood is happening. We sometimes hear it called the 100-year flood. We avoid saying that because, you know, Baton Rouge had their flood in 2016 years ago, so that means they probably won't get it until 97 years from now. I think Mother Nature is really destroying that myth as we see Houston bombarded with over a foot of rain already, again, just a couple years after Harvey. That 1% annual chance actually translates into about a 1 out of 4 chance in the 30 years, here being the typical span of a mortgage. So high-risk areas have a 1/4 chance of getting flooded over the life of a mortgage. It's where you get base elevations. That's where you have to build to as a minimum. How your community might have higher standards, and you have to build higher than that, what's called freeboard. They add on 1, 2, 3 foot higher from the safety concerns. Plus, unfortunately, get around to updating these maps as often as we wish they would. But so this is kind of a safety matter to put in there. And there's the thing about the high-risk areas is the federal mandatory purchase requirement. Lenders will require flood insurance on these areas. Federally insured or backed regulated lenders would have to. The requirement is triggered by another acronym to help you remember this. If you're making, increasing, renewing, or extending a loan. So if anything are going on and the lender is really regulator or insured, they're going to have to require flood insurance. I sometimes hear people say, well, FEMA's making me get flood insurance. It's the lenders. FEMA has nothing to do about the requirement. Actually, Congress created that, and the regulators are the one who are implementing it. A change in the escrow requirement recently is to be, if you escrow anything, you'd have to escrow flood insurance. In the reform legislation that came out a couple of years ago, they basically said you have to escrow flood no matter what if you're requiring it. And then I talked about the appurtenant structure exception, i.e. the garage. If it's in a high-risk area and the house is in a low-risk area, the mandatory purchase requirement does not kick in. So if the lender require you, you're going to a building site, you're getting a permit, you're going to do a course of construction, get a loan. The outstanding balance of the loan, the maximum value up to the quarter or the insurable value of the building. They can't require more than the insurable value of the building. Actually, it's the first one. I tell you the downside of that for homeowners is that if it's their principal residence, which means they live in it 80% of the time, they don't insure it to at least 80% of its value. The time of a claim, it will be not as paid as replacement cost. It will be as actual cash value. That's depreciated cost. So if that siding is worth $8 a foot right now because the house is 20 years old, it might be worth, make this up, $4 per foot or something. So you get the depreciated value. So a lot of people don't know that. They're saying, oh, I'll get flood insurance because the lender's requiring it. The agent's not doing their job. Come claim time, they might have a very unhappy client because they didn't encourage them to get the full amount or so they could replacement cost. If for some reason the homeowner does not get coverage, then the lender is going to force place it. They go through a letter cycle, and it's much more costly, anywhere from 3 to 8, 10 times more expensive. Why? Because they don't rate it. Their only rating criteria besides the value is it an A zone or a V zone? Yeah. So minimal underwriting, so they have to charge a lot just to cover those costs. Yet, not too many people write it through the NFIP anymore. It's basically written through private carriers, the force place coverage, a lot through Lloyd's and Assurant are the two major writers. Other zones to know, of course, are the non-special flood hazard areas. Again, not a really great name because non-people think no and no risk. In Louisiana, everybody lives in a flood zone because you don't, FEMA does not map the no flood zone. You don't have that on the map. They're in a high-risk zone, which I just talked about, or these moderate or low-risk areas shown on the screen. The moderate areas on the old maps are shown as Zone B, the new map shown as Zone X. If you're looking at the screen, about in the center at the top, you see Zone X with black little stipples. It's a shaded Zone X. I kind of quote the 500-year, but we know it as a 0.2% annual chance. Louisiana, if you take a look at people who had policies, one of the 4 flood claims have occurred in these lower moderate risk areas. Much doesn't necessarily stick to always being that 100-year event. More and more, like Baton Rouge, like the past 2 storms now hitting Houston, bigger. They go beyond what was mapped. The maps are wrong, it just means our storms are bigger. We do have low-risk areas in the old maps shown as Zone C and X. Now they're just shown as X. Here's the key thing. A lot of people say, oh, flood insurance is so expensive. But in that gray area, or that stipple, get this preferred risk policy. There's some claim restrictions and the like. And please start at less than $300 a year. And there's a gray area, if you will, on flood maps throughout Louisiana. So a lot of people could afford flood insurance. And if Mother Nature doesn't necessarily stick to the 100-year flood, if you will, it's nice to get some coverage. Some coverage is better than none coverage because you can quick recover. For those commercial buildings, for those commercial builders that we have online here today, as well as residential, it covers the BC and X zones. They recently added A99 and AR. Those are ones behind levees. And contents, likely, just like your homeowners does. The other types of policies, if you will, do not, and you have to have the homeowner or business owner ask to have contents covered. It is not automatic. And then on those flood maps is the base flood elevation. As I point out, it tells you guys where to build. The base flood is 1% annual chance, and then what they do is they map out the height of high up that's going to come, and so you're expected to build that. As I mentioned, many counties and communities in Louisiana, parishes, will require at least a 1-foot freeboard, which says, okay, the NFIP minimum is this on the map. We need you to build 1 foot higher as a safety. So is that measured with the lowest floor on non-elevated buildings is the top of the slab, or the top lowest enclosed area. And for those elevated buildings, it's the top of the elevated floor in Zone AE. But note in Zone VE, it's the bottom of the horizontal structure. Why? Because you can see in that lower picture, the waves are going to hit the bottom of the house first. So that's why the lower floor elevation is there. You probably know this, but to get that elevation, requires an elevation certificate. The surveyor, engineer, architect can complete that. For all buildings built post-firm, anything you're doing now or any substantial improvements, rating, if the building was constructed before the first map was issued for that community, they need the elevation certificate, but sometimes it does help with the agent. No, believe it or not, this is the current elevation certificate. It's a 2015 edition. If you read somewhere, it says it expires 2018. What is the Office of Management Budget requires throughout the federal government, all their forms be revisited like every 3 years. And I'm on a committee, I'm insurance committee for the Association of State Floodplain Managers. And we and the sheriffs and the insurance formed a little committee to help team identify what need to be made to the elevation certificate, keep it up to date with the flood manual, as well as things that are going on in the industry. Before those changes could be put in, FEMA had to get this approved because it was expiring. So they put it in May, and we are now a year plus September, what's that, 7 or so, and still stuck in OMB. So keep using this, even though it says expired, keep using this for any future constructions. Elevating is that it helps not only reduce the risk, like that one freeboard, but also reduces the cost, the rate. So he pulled up, the rates are slightly older, but gives you an idea. You build at a base flood elevation for a $250,000 home, taking it to the limit on a slab, you're going to have $2 grand. But look, by just doing 1 foot up, it reduces the cost almost in half. And you can almost kind of use that across the board, 40 to 50% reduction. And it takes a third off going up 2 foot from 1 foot. And then you can see difference between 3 and 4 doesn't get much more. But for some reason, you're allowed to build below the BFE, and hopefully that doesn't happen. The cost more than doubles on that. I know there is, you guys as builders and developers have to figure out, okay, that's going to add an incremental cost to my building. It's worth it. Well, another way to look at it is from the person who's buying it and what it does to the principal payment. I got this from Association of State Floodplain Managers. They did a presentation on this. So it was built at BFE. The print interest was going to be about $963 in this example here. The flood insurance, and though you can't do it monthly, it would cut to about a monthly if you're escrowing it, comes out to about $1,100. By foot freeboard, it actually reduces the cost, principal, and interest by doing 1 foot freeboard. Lower the cost of flood insurance, into the principal interest sum, but the overall benefit to the homeowner is a flat drop. And in filling up in even lower risk and a lower cost to the home who would be buying that house. And finally, 3 feet built, resulting in a decrease. So, I urge you to consider that, yes, there is cost involved, and I'm not an expert in your industry, but also think it from the buyer's perspective. Maybe this might be a slightly different way to approach it to the buyer, saying, we did build it higher, and this could result in actual savings when you throw in the flood insurance savings. So, food for thought. And the way that the cost can be dropped if your community that you're building in is a participating community in the Community Rating System, CRS. This is a program where community volunteers to join, and if the minimum standards of mitigation, emergency systems, outreach, etc., they get points, and those points add up as credits, and actually then can get different ratings. Start off at a 10, you go down to a 1. And notice, for example, Jefferson Parish is a 5. So they're getting 5% discount for every class. So they're getting 25% discount on the high-risk areas, and being rated with a standard Zone X rate are getting 10. So they're getting a benefit. So that's, see, that is worth $2,000 right now, or $2,000. We're getting a $500 deductible. That's a lot. So your community is not participating, or they are, and you think they can do better, encourage them, because that helps the cost for flood insurance as well. So then a quick view of the basics of the NFIP. Jerry, who is helping me on the program, she's the contractor working with Louisiana Department of Transportation, Dewberry, to see if anybody has put any questions in the chat. And be on mute, Jerry, I may have lost you.
No questions in the chat, Bruce, but I have unmuted the call if people just like to ask a question.
All right.
Okay.
So as we go through, if you do have questions, please put them in the chat, and we'll look at it at the end. We'll be able to open up the lines as well. So go ahead and keep moving along for the sake of time. This is going to get into deals with flood maps. And I had spoken with one of your state associations as well, local chapters, as well as the National Association of Home Builders, person that I know up there, having done a lot of work up in Washington, D.C.
Hey, Bruce, I'm sorry to interrupt, Bruce. We did get a question in the chat about the last slide. If you could go back to that last slide showing the CRS ratings for the community. Okay. Specific about this slide that I need to know.
A snapshot, if you wanted, you can Google a community rating system, and it will take you to the website for this. You can check to see where your city is. So just Google. I'd say go to FEMA.gov, but even FEMA will tell you that their search engine is not as good as some out there like Google or Bing. And that's the presentation. At the end of it, we will put this a PDF and send it out to everybody who signed up for the webinar. So absolutely, we'll get that out to you. Okay. Sure. Thank you, everybody. Keep those answers and questions coming. So one of the things that both groups said, we'll talk a little bit about the mapping program, map changes, and I mentioned to you Louisiana is a cooperating technical partner, so they kind of take the lead in helping FEMA remapping those areas that need remapping in Louisiana. The state, the region, FEMA Region 6 itself is quite large. It's got 5 states, of course, Texas being a huge state in itself. But through that, they have 176 projects going, but actually in Louisiana, we have 22. Slaughter is happening. And it's important as a builder to know where they're happening, because if you're going to be putting something in and you're finding out the preliminary maps come out and you say, oh my goodness, one that's affecting the area I'm building in, you may find that it's going from a Zone X to a Zone A, and it'd be beneficial to actually build higher into those Zone A standards now. Or you find out, hey, it's about to go into a Zone X. When this becomes effective in 3 months, I can wait that long. So therefore, that is my plans. Maybe I can save money. So, and we still want you to build to reduce that risk wherever you can. So this couple of slides takes a look at the different impacts that map changes can have. And again, the focus is going to be on flood impacts because that affects, as you saw that earlier slide, could impact if you're trying to sell or buy a house that you've constructed for all costs. The principal and interest plus flood insurance is important. So the first one I'm going to talk about is those that are newly identified to be at high risk. So this house has been happily in Zone X, and that's come out, and now we find out it's in Zone A. Well, the next flood insurance program has a rating option called the newly mapped procedure. Now, through these next couple slides, I don't expect you to remember the details, but do hopefully walk away. Say, if risk is changing and it's getting riskier, to simplify the terms here, you have rating options to reduce the risk. And the best thing is to call agent. When this does happen, this scenario on the screen now, the mandatory purchase requirement kicks in, as I mentioned earlier, but the homeowner purchases or business owner purchases a preferred risk policy, then 12 months after the map becomes effective, then they will slowly increase their rates to a standard Zone X rate or using the new map, whatever is cheapest. So boom, you go straight to Zone AE. It will take it over many years, and we have time to get into the details, but I want to let you know that option exists. But even more importantly, if the person purchased this policy and they're selling the house to someone, or you're the owner or you're the builder and you're building it as a spec and you own it and it's changing, get a policy in effect. Therefore, you can then assign that policy to the new owner that you end up selling to, that he or she can continue with that newly mapped procedure rating, that step by step by step by step. Otherwise, they may have to go straight to a Zone A rate or at the standard Zone X rate. So the rating option to reduce the financial impact when you go from a low to a high risk area, and that policy can be assigned. There are cases already in a high risk area like Zone AE, and it's now even a higher risk. The first could be a Zone A going to a Zone V, a velocity around the coastline, and it'd be a Zone A, maybe near a river, and the flood elevation goes up. In both cases, there's a thing called grandfathering. Grandfathering will lock in, see at the bottom, that lower risk Zone AE. So even though it's now Zone VE, or even though the flood elevation has gone up, you can get with the lower risk zone or BFE. Two, grandfather. One is have a policy in advance before the map changes. And I strongly encourage all of you to do that. If you're in the middle of construction, something changes, get that policy in place, lock that lower risk zone, and you then assign that policy so they can continue with the grandfather rating. For one firm, and let's say the agent forgot to do the grandfathering, didn't get around to it, or there was no policy in place because the person owned it and had no lender requirement. Post-firm, you can go back and to show it was built in compliance with the earlier flood map, and therefore put in the grandfathering. It takes a little more paperwork for the agent, but built in compliance, as a way to grandfather, but it only applies to buildings that is post-firm, built after the first flood insurance rate map for that community. Why? Because you have to show it was built in compliance with a flood map, and the flood maps before the community joined the NFIP. Best one recommended is have it in place before the maps change, and then continuously renew that policy so you can take advantage of the continuous coverage. Finish up with the cases where, because we have a lot better topography, elevation data, and know what that topography is, and we have more sophisticated models, that the plane actually is shrinking, and so a home that should be at high risk is actually a low risk. So it's gone from a zone AE to a zone X. But this I didn't say at a no risk. Well, because when that happens, the federal mandatory purchase requirement goes away. And a letter is sent out by the lender, that one, it says, hey, you no longer required. Unfortunately, that homeowner reads it as, hey, no longer need it. And his wife are doing the happy dance because they just saved $2,000 a year, when in fact they're still at risk. They've just been reduced. It has not been removed. And in fact, 1 out of 4 claims in Louisiana, as I mentioned earlier, occur in these areas, and that's on people who had flood policies. So we encourage insurance agents to get out there to convert the policy that's on that high-risk area to a PRP at the time of the map change. Nothing the insured has to do. They get back on the difference between the PRP and the high-risk policy. There's no getting coverage. So and win for the community, because that person retains coverage, so when it floods, not if, next time, they recover more quickly. What about flood maps to be aware of? Vertical data. Louisiana still has some older maps, and older maps were done in a vertical datum known as NGVD 29. As builders, you're probably very aware of this. FEMA said, and the federal agencies, as a matter, all said, we're going to go to the North American Vertical Data 88 datum. So every now, including the maps, are being done in NAVD 88. Mirror when you're building, when you're looking at that elevation certificate, you're doing matching apples and oranges with oranges. The lowest floor elevation here shows 111 in NAVD. The elevation back NGVD is 109. The difference is 2 feet. Nothing changes except with the new vertical datum 88, it's 110 and 108. It's still 2 feet. But where it's mixed up is somebody might take the lowest floor elevation from an old elevation certificate and use the new map for flood elevation of 108, and now it's showing a 3-foot difference. Or vice versa, and doing 110 and 109. That really also affects then how you read the policy and agents mess up. So if you're involved any with elevation certificates and looking at them, make sure, as an apples, datums to datums. Don't mess up and mix the two. Times when you're like, well, I don't know why I'm in this, quote, flood zone, as they say. Why am I in this high-risk area? So FEMA has ways for removing a house, if you will, from a high-risk area on an effective map. You can't do this for preliminaries, but on an effective map. And the one is around letter of map amendment. It's where they actually send in, with an elevation certificate and fill out the forms, a request for this letter of map amendment that says, my lowest adjacent grade is at or above the base flood elevation, therefore I should not be shown as being in the floodplain. And so then FEMA issues a letter of map amendment, and that letter of map amendment is literally a letter that literally amends the map. And on the new digital maps, it actually shows up as a permanent point. So you can actually go in and find that LOMA for any homeowner, or if you're building in that area, and use that rating, building, permitting, et cetera. It looks, a mapping happens, and lenders saying it's in a high-risk area, the agent saying it's out. You can get a letter of map amendment out shown, which doesn't require a surveyor, but attaches a map to show clearly it is out, and you send that to FEMA, and FEMA can issue that. There is also a letter of map revision fill, which means you've come in, maybe you've built up the house higher, the floodplain. The details of the map can't get as detailed as an individual house from an elevation perspective. You're a show because I brought in fill, and you are allowed to do that by the local officials. Therefore, you might be able to have it removed from the floodplain. Any of those cases, we highly recommend, though, to please continue to carry flood insurance. It makes you eligible for the preferred risk policy, again, starting at less than $300. It's still at risk. You've just reduced it, but you can't remove it. Just FYI, there is a thing called a letter determination review where you can send in for an opinion from FEMA, but the lenders don't have to honor it, and it does not show up on the map. So details, I put the link at the bottom about letter of map changes, and there's a great fact sheet about that as well. We have a lot of time to get in all the aspects of LOMAs, but wanted to let you know if you were not aware of that. There, again, before we get into recent changes with the NFIP, and see if we have any questions for the last few slides.
In the chat, Bruce.
We do have a few more slides, so if you've got a couple questions, please put them in. We'll take them at the very end then. So this next part is fairly short, but just want to highlight a couple things about private flood and recent changes in the NFIP that might affect you all, your businesses, builders. It's private flood. You're probably seeing more of these. I won't say you're being flooded by these new type of policies, but they're out there. Just in the past 4 or 5 years, we've gone from about 10 writers to 50 different providers of private flood programs throughout the U.S. A lot in Louisiana and in Florida and Texas area. What's different in the NFIP is that they've got higher limits. They actually include replacement costs on building and content, so where it's very specific for the NFIP, there's a lot more opportunity for that. Ken is very limited with the NFIP. With the private flood, you can say, I don't want it anymore. That's something you can't say with the NFIP. The wait period is typically 30 days if there's not a lender involved for the NFIP. Here, private flood, my search has shown anywhere 0 to 5 days, but a couple are up to 2 weeks at most. Here's something that's very different. Besides having cheaper rates in certain areas, their personal coverage, business interruption, additional living expense. If you're flooded and you have to go in a hotel, they'll cover that. More basement coverage, hopefully, doesn't apply in your area, because if you have a basement a lot in Louisiana, that means you've got an indoor swimming pool almost. One has an endorsement for $10,000. Flex, do what you want. Even one has swimming pool clean out, which would definitely not be covered by the NFIP. So not only they're making it more attractive, but what's offered also price as well. The lenders are now instructed to accept these policies. It is as broad, and there's a couple other things. Basically, the lenders, it says, by the regulators and the legislation, must accept. So we'll probably see a growth in the private flood market. So I want to let you know that if you're securing a loan and you find Lloyd's program or some other that could write it as your building, to be doing substantial improvement on a house, they've had flood insurance before, and that person comes through with a private flood policy, that'd be okay these days. The things I talked to you about is about the detached structures in a high-risk area, and the home is not. The federal mandatory purchase is not, does not kick in. And also, if there is insurance involved in a loan, it must be escrowed. Changes with the NFIP. Believe it, you now can have 2 primary residences. So if you're building a home, a vacation home, but really it turns out South Louisiana somewhere, or in Louisiana, let's say in general, they've got another home up in Illinois or Minnesota, and the husband loves to live up in Minnesota more than 6 months a year, and the wife loves to live down in Louisiana more than 6 months a year, and their marriage seems to work that way. They count that as primary residence. That's huge because it changes a surcharge from $250 to $12. So that's important to know as you're constructing. That newly mapped procedure I told you about, if a lender comes after that 12-month period and says, hey, you're required to get it, change the newly mapped procedure to say if a lender's requiring it after that 12 months, 24 months, we'll continue to do the newly mapped procedure. Two-to-family buildings, if the owner is living in one of those 2 to 4 families, it is their primary residence. Again, that makes a huge difference on that surcharge. And then finally, a lot of interest now is perking up around risk rating 2.0. Both the national and the regional people I talked to said, at least for South, NFP is changing how they are going to be rating. I haven't announced and released it, but the rates will be released in April. They become effective next October. They'll be looking at distance from the water. They'll be looking at elevation. They'll be looking at replacement costs. Those are some of the things they haven't looked at in the past. So stay tuned, keep close to the ear to the ground, keep in touch with your National Association of Home Builders or state or chapter to follow how that develops. Understanding is FEMA is internally testing this with some Write Your Own companies starting next month. The initial rates they have rolled out in April will be for single-family homes, and across the U.S. they've created, I heard some rates right now for the Gulf Coast and Southeast Coast for testing internally. So we haven't seen it. The curtain hasn't been pulled back yet. Let's skip the questions till the end, just so I can make through these last resources. The question is, okay, Bruce, I just had another question like this recently. Where do I find about maps? Where do I see where the maps are? Well, you've got the Map Service Center, and there you can not only find out where the current maps are, but you may find out, take a look at the prelims. So when you're going to build, you know how your area is going to change. Even look at historic maps. You have some interactive maps like this, which actually you can go in, put the address. I don't know if you can see in the middle, I put a pin, and you pull up what's called a fernet. This is on the new digital maps. So you can easily see the homes, the streets, where the older maps, it's a lot more difficult. If you go to the Mapping Service Center and you, on the left-hand side, click the Search All Products, this page comes up, you fill in this information, and then it tells you, okay, we've got preliminary maps there. We have some old maps, too, I can go back and look at. So if I have preliminary maps, how is it changing? Well, if you have the viewer, which the link is this fact sheet here. It's a long link, so it's easier to go to this fact sheet to get it. It will do this. There's no digital map here, but if there was, here's what it is now, and here is what the preliminary is, and you can see what's going to change. Even if there isn't a old map that's been digitized, you can at least look at the new and say, okay, there I put the point. What happened? Where in these maps become effective? Where will the highest area be? And I need to change how I plan to build. If you want to keep up to date on what's going on, there also is this page here, which tells you where a community, a parish is in the mapping process. If people have questions about flood insurance, I would put this on your website. We don't want you necessarily to be like a flood insurance expert or guru. It may open you up to too much liability. So here's a great consumer website for you. Here are some brochure for you and property owners that you may be interested in having about the preferred risk policy about map changes. The one on the right is a great, easy to read coverages in a policy. Put links here. These are more construction related. The top one is probably number one to go to, but utilities to coastal construction to residential buildings that can't be elevated, what are some things you can do? So these are useful guides if you're not aware of everything that FEMA has out there for builders, quite extensive. And finally, I know occasionally realtors are on these webinars and workshops, so I put some links in here for you as well. With that, I'll finish up. Susan is the CTP project manager over the mapping program here, so she can answer questions you have about the mapping program. Gil is the insurance specialist for FEMA Region 6, and he really knows his stuff. He's been on both sides, mitigation and insurance side, and knows the mapping as well. And then you've got myself. So we've got a minute or two. Any questions out there?
Bruce, we had a question in the chat box about the vertical datum conversions and how you actually make those conversions. I sent the person that asked the question a couple of links in the chat, but I guess we just need to make sure that that's covered in your slide when you send that out.
So there are a couple, as Jerry said, a couple websites that are available to do that vertical datum. You also can find it in the study itself. Say to also get it is take a look at the within the flood insurance study. The conversion factor will be in the flood insurance study or be on the map panel. But also there are some websites that are available as well.
Yeah, USGS website, it says, like, in general, it's 3.5 feet. But I caution you, especially in South Louisiana, South Interstates 10 or 12, it could be a much higher number because of subsidence and things of that nature. So make sure you're checking that reference, and if you have coordinates, you can send them into the link that I just sent out online, the USGS. If you just Google USGS datum conversion, there's an online page that you can enter coordinates, and it'll tell you what your conversion is.
Local community official may be able to help you on that as well.
Yes.
They may know that right offhand, and that you're using their numbers. So when you're going in for your permit, it's matching up. All right, thank you. Other questions that came across?
Other questions in the chat?
It's at the top of the hour. I'm going to thank everybody for their time. We had one or two associations ask for a record copy so they could push this out to their members, so we will be providing that as well. Fingers crossed that the recording went well. And well, the best this week. And thank you again for taking your time out, and thank you, Jerry, for all your help.
Okay, anytime.